Hello friends, let's do some Bitcoin technical analysis, but first, my hair's long and it's curly too. I look like Slash, but I'm a handsomer dude. If you like this channel, why don't you go ahead and hit like? Yeah. Sub, be subscribed. Okay, so thanks so much for joining me. Where is the Bitcoin prices? It is on the 4-hour time frame, just above the 21 exponential moving average, or is it just below it? It's hard to tell from this zoom level. And we are just below the 50 simple moving average. Let's zoom on in there. Zoom, and see what we can see. And it looks like we are just being resisted by, as we have been over the last sort of 12-hour period, really. Let's take a look at what we have on the go. But as well, before we actually get really properly into the nitty-gritty of this technical analysis city, I'd like to say to everybody, thank you so much for joining me to watch this episode. And if you do subscribe, then you are, of course, a special type of hero. And I'm going to be doing a sort of Bitcoin giveaway. Okay, so if you want to take part in that Bitcoin giveaway, where I'm giving away 2 prizes, one in Satoshi values, the amount of views that we've had on the channel. So let's just go and check out what that is currently over the last period of the last 28 days. 21,961. So every view, or maybe 10 Satoshis. I've not actually decided yet. I want it to be worth something. So shall we say 10 Satoshis per view? If we can get this up to a decent value for yourself, then obviously the power for that resides with all of you. So share and subscribe and all that sort of jazz. And to enter it, all you have to do is leave a comment saying Rocky, you rock down below in any of the videos, really, actually. And I'll do a sort of random selection thing. And I'll also do a first prize giveaway of enough for one of the bonuses that you get if you use one of the affiliate links that I have down below for like Bybit or whatever. So whatever it is, I'll have to recheck those numbers, but we'll see what it is. And that's what we'll do for that. Okay, so thanks so much for tuning in today. Not a lot of detail there, but I'm sure you want to take part and get that view number to be up fairly high for that Satoshi prize. Cool, we're just below this. And the 24-hour time frame, how are things looking? Boyo. Well, this chat that we've had recently of do we have a descending triangle on the go here in this shape, it still remains. And I could draw it back on again, I suppose, for us to kind of peruse as we look at the charts. Now, of course, as you can see here, the price action did go a little bit lower in terms of the body closes over here. And over here, what we have is a little bit lower in terms of the closes, in terms of these highs here as well. So let's just break this down a little bit. High, low, lower high, lower low. So far as well, lower high. And how's this looking in terms of the divergences and whatnot down below? Well, as we've had these lower lows coming in here over this period, and that's not really actually a lower low. This is the only one here. But like looking at this, you can see that there is a little bit, higher. So that's a bit of bullish divergence, is it? And what do we have here though across these 3 peaks? Looking at this, we can see that it has got higher as well. So that's a bit of that bearish divergence, continuation divergence, in the sense that we've been in a downward trend. Okie dokie. So we've got a little bit of this and a little bit of that. Overall, if you want to say that there's this bullish divergence here, is it really quite good? Or if this bearish divergence here, is it really quite terrible in terms of longs and shorts for yourselves? Well, we'll have to see if this is able to stay within the shape of this descending triangle. Movements out with this area are going to be taking us up to perhaps, trying to go higher than this previous high, where we'd be able to throw off the shackles of this bearish divergence here. And if we go even higher, then of course, we'd be able to actually say that maybe we're trying outside of the fake out territory. But let's just kind of remember where that would be for now by just drawing a little sort of area in here and saying, look, anywhere in this area is going to have to be considered fake outs, as you can see with this wick that we had over here. And then on towards the downside, of course, 10,120 being a key area for us in terms of this lower line here, and movements down below that would obviously be quite bearish, where you may be able to get a movement off the measured move off the back of this thing here, which ties in around about in terms of the full whack thing. It ties in around about this area here in the 9,700s zone or so, so you're looking at a decent move down the way. If this had happened in the past, you went the full thing, then you'd have gone down towards the lower end of this parallel channel. If it happens over the next day or two and, it's not the full measured move, in terms of just this measuring stick here, but instead is like a 60% gambit on that one, then of course, like the textbooks would tell you, then that would take you down to this median line of this parallel channel. So this parallel channel that we're potentially kind of trying outside of at the minute, as we look at it on the 4-hour time frame, it looks more like, or maybe let's look at it in the 1-hour time frame. Yeah, look, we're trying outside of it. Over here in the 24-hour time frame, that's very much a premature thing to say. And as you can see, the prices have really just come back into it again anyhow. And that's where we stand. However, you can also look at this a number of different ways, and don't let anyone tell you that these things aren't subjective, because they absolutely are. And there are no hard and fast exclusive rules on these things, apart from maybe occasionally invented by those who don't actually trade, but just simply write textbooks. If you're to do the full measured move, then off the back of that, using the wicks, then it's taking you all the way down to the mid 9,000 area, 9,500, and the 60% area on that could potentially take you down to that initial target we had whenever it was just used drawn body to body at that 9,700 area. Whoa, what do the CME charts say? And we still haven't filled in this gap down below, and we still haven't fully filled in the gap on the hourly. Of course, we did on the 3-hour chart. And I'm sure there's another thing we can look at. Whoa, Fibonacci, yeah. So in terms of the Fibonacci's, we're looking down to 236 here at 10,140. Oh, that's a familiar number in terms of where this lines up with, and movements down below that obviously open up opportunities for the price to perhaps move down and fill out a few targets down below. And that would take you down perhaps down as far as 8,800 or so, if that's what that says. Is that what that says? Yeah. And 7,800 thereafter or so. And then the 618 comes in there at 6,500 buckaroonies. Let's take a look at what that would line up like in terms of the historical charts. Let's go over to the weekly, in fact, and zoom out a bit so we can see, what does 6,500 area look like? Well, oh my goodness, there's quite a bit of activity here. Key inflections in the market, as you can see here, with the struggle shown by these wicks in and around this area, then ever the sort of the support coming in as we broke past it, then that shooting up towards the top side. Oh, look, something similar kind of happened here in the run up towards that zone, and then shooting past it, coming back down to retest it thereafter. Oh, something kind of similar happened in here. So if we were to go down towards that area, then of course that would be where absolutely scary times for everybody. But that would be something to look to if we were to be doing something along those sorts of lines. But as you can see there on the weekly time frame, we're outside of we've got, I don't show up the pitchfork. It's not actually visible here on this time frame, but you still got those lines showing us, where it is in terms of the upper warning, the upper line, and the median line. And it's easy to see from this broader perspective how, we've really kind of done something quite different when we've moved along away from that area. Going back to the 24-hour time frame then, and just kind of zooming on in and taking a look at where we stand with regards to that. Well, in yesterday's episode's sort of timing, around about then, we came up and we tested this, the lower warning line here. If you have this upper warning line, upper line, median line, lower warning line, we came in and tested that. And we found support at times with this lower area here in terms of, wicks coming down and going into the sort of second extension from it here down towards the median line of that, then coming back up and being above the 236 thereafter in terms of its body closing throughout this period. So you can see the significance of that. And of course, psychologically and everything else, you don't really need to draw on the descending triangle to kind of understand where we stand with regards to that at whoa, sweet child of mine. So, where else are we in the world of crypto right now? And in terms of this parallel channel that we had drawn on a different chart, I appreciate there's noise on here. I do. I know there is. Then what we're looking at is having been coming right at the median line of this parallel channel. So, of course, there's obviously upper side resistance in here, concordant with our current area of resistance, with regards to the descending triangle, and giving us this nice sort of lower high overall. And this close here really did give us that nice lower low overall as well. And what does that all look like then on the DMI? Pardon me. And what it looks like is that you have this trend. Of course, this is the 24-hour time frame, and you can see that while this has sunk down a bit, the negative DI here as a result of the price action, no longer continuing to go down at shocking rates and really push past the previous bodies and the previous candles. What we really see here is, though, that the ADX then continues to rise towards the top side, showing us that strength of trend continuing. And of course, then that kind of is a little bit kind of bearishly stanced. And also alongside that bearishness, you have this convergence with the MACD throughout this period here, showing you that there isn't that bullish divergence that you can see on the RSI. Looking at the stochastics, while there was no bearish divergence between these two lows, and this is looking more, like a thing to be kind of remarked upon with this in-between period where you could then say low, high, low, and this bit of flux here is less remarkable. It is slightly bullishly divergent during that flux there, but that's just in this period here. On the run down to it, we were not actually divergent. So this pattern kind of initiated without any divergence leading up to it. So it's not that sort of got that nice reversal type hallmark on there for us. So what else do we have then to take a look at? If I just flick through in a couple of different charts, maybe something will jump out at me. Oh, look at this on the 24-hour time frame. The 21 EMA and the 55 EMA are just coming into cross there, as I can see on all the charts, obviously here. Right there, all the spot charts, that is. But it was only really became clear when I got a nice clean chart. Oh, that must be very satisfying to those of you out there who really do want to see the old clean charts for us. What about though looking at this from this point of view, where we come up here towards this, up here towards our highs, and then the 17th of August, and then down towards this most recent of lows in terms of the wicks here on the 8th of September. How would that all kind of tie together if we were looking for upside price action? Okay, because we've been talking about downside levels and, the 236 there at 10,140. Where would you be looking then for a 236 towards the top side? And lo and behold, it comes in there at 10,500 right here at our high. And if I just jump back over to this chart here, you'll see how that handily ties in with the initial fake out territory that I was speaking about from the body descending triangle. Okie dokie. That now will do in terms of the episode. Isn't it quite wonderful, the technical analysis that we have here? I'm just like Slash, but I don't play guitar. Instead, I look at charts and I'm a fucking star because I've got 1,600 subscribers on YouTube. Yeah, boo, 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 boo. Oh, hit that button. Yeah. Boo, 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 boo. So I really do appreciate everybody tuning in today. I hope you've had a good day. And remember, of course, that this is not psychic advice. Always consult your own psychic advisor and check out your own crystal balls before making any financial decisions. And thanks so much for tuning in. I'll catch you next time.